everybody. You're probably going to feel that I'm going to put tremendous salt in the wound in my presentation. When we talk about stormy weather, you are going to see how stormy it is already. We're not active here in Austria. We might be. You'll hear a little about us in a couple of minutes. But you have some fundamental problems here that we don't have where I come from, Denmark. But you need to get them fixed very, very fast. So the presentation here will talk a little about the realities that we have out there. And it's going to introduce some of the solutions that we need to come together. Because I completely agree with Jörg from KfW, which by the way is an LP in us, that this is a situation where Europe is at a crossroad. But before I go into that, let me introduce a little about who we are. So we are a growth fund, which means we invest in the scale-up phase. Apparently, I just learned from Monica that doesn't exist here in Austria. With the kind of capital you have committed into that, we don't come from this industry. We come from building companies, industrial companies. When we established Nordic Alpha, we decided we want to invest. Nobody else wants to invest. And that is the scale-up phase of ultra-complex, transformative, hard-tech assets. Exactly what you'll ask private equity, they don't want to touch. But our approach was, of course, not that we were stupid. We also believed we had a model that could do this. And we have a belief, and again, this is something that it's so important that everybody understands here, is the financial ecosystem is the only way to maintain competitiveness, to create prosperity. And you'll be introduced now to how other regions in the world are doing this. So we look across the financial ecosystem because we don't believe we just to deliver return. We need to build companies, take innovations, and build them into large-scale industrial platforms. Beginning with the growth phase, but what you'll see today is we're moving across that ecosystem. Some of the things we're doing is we're working all the way in the coming out of the innovation environment in Business Angels. We're working with 50 climate tech funds. We have a full line of in-source value creation, so which means you work with us, you get access to a full capacity of everything you need if you're a young industrial company. We need to educate and create language, which means the playbook we took 25 years to develop will be fully released in a book 2 months from now. We've already set up educations with Europe's leading technological university, where we're educating the full financial ecosystem. I was in Brussels last week to keynote a conference. Here, the Commission now is buying the education. And they even want to look if they can find money to roll this up across Europe. Because how many battles have been won without understanding the battlefield? None. And to be honest, what you'll see in a couple of minutes, we are utterly clueless. And yes, standing in these buildings here, there's no doubt we ruled the world for millennia. But we're not setting the rules anymore. So, let's jump into it. This is the reality we have right now in Europe. We're super vulnerable because of defense. We're buying oil from countries that are fighting us. Chips we don't produce, even though we produce the systems that can produce chips. And most importantly, if we want to do anything, we're dependent on China. How many saw what happened in October on China's export regulations on rare earth and lithium? Are you kidding me? This was not the main news here. It was. So, if you want rare earth, and people say, what is rare earth? Yeah, you want to do anything that's interesting, you need rare earth. China said, if you want that, you need supply. And by the way, you need to film your full production so we know what you're doing. And we're going to put limitations on depending on how you use this. That is geopolitical warfare. How much lithium production do we have in Europe? Doesn't exist. How many magnets? Doesn't exist. This is what we're up against. And this is not only Europe. Same with the US. Same situation. They have a little more defense than us, but they're also dependent on really, really ensuring self-sufficiency around this. And what this is driving is a complete disruption of what we spent 150 years developing. So we need to get used to a new reality. So just going back in time, in the late 80s, we started the second industrial revolution, building the fundamental infrastructures we know today. After the Second World War, we started globalizing. maybe we weren't that good at production. Maybe find some cheaper place to do it. Early zeros, we started putting on some green technologies there. The estimate now is that if we want to maintain sovereignty as a region across the world, you need to spend $215 trillion US. I know you guys are trying to set up a fund-of-fund structure. Europe alone needs to find $50 trillion US to maintain sovereignty. This means $1 trillion US here in Austria. 1 trillion. I just looked at 1 billion, so now you're only missing 999. And if we don't do this, we're not going to be able to be self-sufficient. When we don't do that, you won't get rare earth, you won't get all these things. But it's also the biggest investment opportunity on the planet. There was this amount of money went into the digital age. So this is also a huge opportunity to the one that can crack this. So this is what we need to do. We need to ensure that within the regions, we have a technology, we have a talent, we have a scarce materials, we have a production competences, independent energy, and of course defense. And then people that are in the investment space, what is this? All this? Look at the side, that's the industries that we need to scale up. That's where the 50 trillion needs to go. The problem with this, it's capital intensive, hard tech, green tech, deep tech. You don't even have SaaS scale up. You will be a while before you have somebody stupid enough to do hard tech scale up. It's so much more difficult. If you look at the industry, very often I meet private equity companies go like, everything you do is exactly what we avoid. Because that is not 2, 3, 4 times as complex. It is much more complex because it's introducing a new reality. And this is some of the things we're working on. We introduced this, we work with professors in North America, leading academia, saying, we are at war. If we don't understand the battlefield, we will not succeed. And everybody I talk to, even the highest level of the commission, even politicians in Denmark, they don't understand the components of what we need to solve. This is the reality, and I can tell you, we will not save Europe with SaaS. It's impossible. We need those industries. So this is the reality we're dealing with. Everything of these new technologies are essentially new value chains. New value chain means heavy third-party technology dependency. Recycling is a complete disruption of waste management. Any new energy technology you put on the grid are dependent on 20 other technologies to go large scale. What about regulatory side? The biggest risk factor in any of our investments are EU. EU's attempt to try to help Europe. Because what that does, it immediately kills all young innovations. I don't believe there's a single industrial grade startup within recycling that exists anymore because EU's waste transport directive killed them all. Couldn't get waste across borders. As an example, we have a company, German company called Stable. They have world-leading inverter technology. They can take a used battery, a waste stream of battery, and build a battery energy system that outperforms a brand new Chinese system on every factor, uptime, longevity, cycles, everything. So, wow, great, we don't need Northvolt, we can just put batteries into containers based on this inverter technology. No, because EU comes out with battery passports, which means there are no business case, but it's a complexity of documenting used batteries. So what are we doing? Luckily, we have an automotive industry that doesn't know how to buy batteries, so we buy the used ones they didn't use, that are brand new, and building these battery systems. We could have solved the problem, but EU was preventing it. That is that corner. But that's not the difficult corner. Everybody who's done early stage investments know about TRL9, Technology Readiness Line. Now our product goes live. Here, we're talking industrial grade, and I can tell you it's 10 times as complex to bring something from TL1 to 9 as it is to TL9 to industrial grade TL9. Because these are huge factories, new value chains. That technology adoption is ultra complex. So let's go to the lower side. So first of all, you can see all private equity have ran away for a long time ago now. But now they're really going to run away. Because what are these companies? CapEx intensive. How long does it take to migrate a software as a service company from Austria to Chile? 2 minutes. What about a recycling company? What about an energy tech company? 5 years. That's a J-curve, huge J-curve. And then finally, we need to scale these companies at unseen pace. Hyper growth year on year on year on year. This is hyper transformation. But this is not 4 times as complex. What you have up here is exponential. Every time you add a factor, it's exponential, which means it's more risk, it's more time, it's more capital. And that's why nobody wants to do it. 0.2% of the 15 trillion US dollars capacity we have in our pension funds goes into venture. IPO market dropped now in Europe again. We're 10% of world IPOs. And by the way, we know that market. 40% of all new IPO capital raised in Denmark, 40%, we raised that through our assets. We probably won't be doing any European IPOs anymore. Because I can tell you, there's so low liquidity, doesn't matter. You can't get out as a private equity fund. So we'll do it in New York. Of course, because I need to raise more funds and I can't drive returns on this. We have a responsibility to back and create liquidity as pension funds if we want these assets to stay in Europe. 5% of world venture. Do you think Europe is 5% of the world? Look, this doesn't add up, but this is because of that. It is too complex. The policy making is not coherent. So we have a huge problem. But again, doesn't matter. We ruled the world. We built these buildings. Aren't they fantastic? For millennia. The problem is, China's thriving with this. Look at these facts. I helped support the whole construction of the scale-up fund. 3.5 billion euros. Wow. China has 2,200 government-backed VC funds with 1.6 trillion US dollars under management. They will put more money into this the next week than what we spent 3 years doing. They now rule 57 out of the world's 64 most critical industries. They came out with the new 2030 plan, last week. Anybody read it? They will lead all of them by 2030. They now do more patents than the rest of the world combined. They have 22 innovation hubs with the innovation power of Silicon Valley. They commercialize 300% versus Europe. This is serious stuff. This is really, really serious. US, well, they have a working capital market. 10% of the pension fund fees goes into risk investment. 0.2, 10? Yeah, but we're better at investing here. Yeah, but if they have 1 trillion times more, it's going to get some effect. But luckily we have all the old giants. Isn't that great? We can rely on the legacy players, like the German automotive industry. This is our ability in Europe. Who knows cattle? Heard about cattle? Established in 2011, 55 billion US dollar turnover. Innovance. Heard about it? 20-year-old robotics company, twice the size of ABB. This is what they're doing. And of course, this is clearly visible. If we saw the Draghi report, and you probably all read it, we have the 2 valleys of death. But we fundamentally believe, because we exist in the second valley, that the problem with the second valley is 2 things. First of all, we cannot ask pension funds to do venture risk. Yes, they can do true funds, but doing direct investments, they shouldn't. If we can fix the quality that goes through that early phase, you're going to have market capital fall in the second. I promise you, because that's the free market. Everybody who went to business school knows that that will happen. The problem is that this is generated by that. Our ability to take innovation to a state of profitability on its platform. So you can put €1 billion into it. And again, working with the EU Scale-Up Fund, we call it late-stage capital. It's a venture fund. I'm sorry. Just look at what they're talking about. It's quantum. It's venture. They're no different than that, than Northvolt and everything else. We can call it late stage because they need 200 million euros every time they invest. But that doesn't make it scale up. That just makes it large-scale venture, which, by the way, US is 1 trillion times better at anyway. So we need to fix this. And what we fundamentally believe is the problem we have is in the capabilities and understanding in that first phase. The incubator phase, the scale-up phase. This is where the hole is. And that's why we've been working with business angels for 10 years. Because business angels, at least the ones that want to get operational with the assets, the ones that sold companies, that have done it themselves, are not light touch investors. They're not lottery investors. They get engaged. And if you look at the facts in Europe, and again, now you're raising more funds here, but I can tell you, if we want to do more SaaS in Austria, great. It's not going to save Europe. But if you want to do industrial stuff, which by the way, we see quite a lot of interesting industrial leads from here. You cannot use the conventional model. It wasn't designed for it. The light touch investment model cannot deal with hyper-transformation. And by the way, nobody wants to do it anyway. 6%, it says 10, but I think it's 6% of them, the early VCs, want to do deep tech. It's moving up more now. And the other thing is, they are light touch. Europe, they're all subscale, and even the large ones, they don't have these heavy support systems that they deploy into actually mitigating the risks. And I can tell you, if you don't have debt finding facilities, if you don't understand the regulatory environment, if you don't know how to actually build very efficient commercial strategies for these assets, they'll just fly into the wall. It's 4 engineers, it's always 4 engineers, I don't know why, that goes together to set up these companies. And they're the brilliantest people on the planet, but they're completely, utterly clueless on how to scale up a company. You want to just ask them, what is net working capital? Never heard about it. It will kill you instantly when you start to scale. Because can we finance net working capital? Of course not in Europe. What does China do? They just put in a 1.75 blocked interest rate for anybody that does industrialization. Boom. Remember Northvolt? Northvolt, they borrowed $7 billion US. How do you think the COO felt that month with the interest rate from 1 to 5? It was not a very, very nice management meeting. So the 1 out of 10 model is broken when we do this. It's not designed to do it. There's nothing wrong with the venture model. It's a fantastic system, and it's worked for 50 years. But it can't deal with the complexity of hyper-transformation. So we need to do something different. We need operational capabilities tied into that early phase. Heavy operational capabilities. Either that funds, that comes out with designs that resembles us, with 21 people. 14 people at Nordic Alpha only works with the operational value creation with the assets. 4 out of 6 partners work only with operational value creation. Because you have to do this. We use business angels. And why do we do that in the early phase? Because I cannot run in and invest 20 million into 4 engineers that has an idea that is almost commercial. We need to do something in that early phase. And what we're experiencing working with them for a decade is the right ones. They have the hands-off approach, they have real scale-up experience, and they have time and individual commitment. And this is a huge army. Huge army. The capacity of these profiles are incredibly strong. I have one slide.
One slide, perfect.
Good.
Then I won't cut you off.
Half the people left anyway, so no. So this is what we're doing. We're setting up an entity to support this. We're exploring it. We see 500 leads every year. We can provide the leads to the business angels. We can provide the full ecosystem that private equity have, financing, debt, all these elements into them, cultural transformation. We can provide uniform language because we have the toolkits. We're already educating them at the educational level, so we get that systematic approach. And then we can provide them real shooting power, up to 20x support. And again, I know a lot of business angels are small here, but in syndicate, this can go into something that is really large scale. And what we can see, this dramatically changes the commercialization. So if you're intrigued, we have a workshop at 4:30. We're not in Austria. We're contemplating it. We believe this is an important part of Europe. If anybody's interested to come and listen on ideas that are crystallizing, that will be interesting. So just summing up, sorry to terrify you, but everybody in this room, we need to step up. This is serious stuff. Look at the facts. We need to step up. Everybody here needs to engage, get engaged one way or the other into the ecosystem. But we need to have the same language, and we need to get operational doing it. We cannot just bring money to the game. We need to bring weapons. We need to bring support. So I hope I didn't make the day worse for all of you. I'm looking forward to the dialogues this afternoon. Thank you, everybody.